Yeah, ladies and gentlemen, welcome to another edition of Crypto World Radio. I'm here today, joined by Nollis as our co-host and Field Payne as our second speaker. And today we're going to get to know what the team is building. And just as a reminder, in case you guys aren't able to stick around for the entire spaces, we're going to have this uploaded onto our YouTube channel. And yeah, happy to have them up here. And we're also joined by their CEO. Kamoka. So, what's going on, brother? Good to have you up here. How you feeling today, man?
Extremely well. Thank you for having me.
No problem, man.
All right, so let's get started now. Just immediately, we can just get straight to the point and all those things. But yeah, man. So, can you tell us a little bit about what Nolus is about and what you guys are building upon? I understand you guys are building on Cosmos, which is quite interesting. I'd love to know what you guys are all about and why you guys built on Cosmos.
Okay, let's start it from there. So the Nose protocol as an idea came like 15 months ago already. So we have been developing a lot the idea itself. Then we started developing the infrastructure. It's a layer 1 app specific chain, which is built with Cosmos SDK. We decided to go that way for a couple of reasons. First of all, once you have a layer 1 app specific chain, you are able to use the full space for yourself. So faster transaction, cheaper transactions. But also Cosmos and the SDK actually allow us to become truly cross-chain in a matter of very simple steps like IBC and interchain accounts, where we would be going to utilize those so that we actually do transaction through all the blockchains from different blockchains. And as a whole, we try to address what the major inefficiencies on the the current crypto market are, because we try to solve over collateralized loans, we try to do better, lower risk liquidations, we try to give asset ownership to the users. So provide them an encompassive end-to-end solution for their crypto. So you as a user can manage all of your digital assets, you can purchase, sell, swap, stake, but you can also take a lending solution called DeFi lease, which comes at lower liquidation, higher exposure, and asset ownership to it.
Awesome. And how long have you guys been building Nolus as far as like testnet and all those things? How long has that been going on, or have you guys not deployed the testnet yet?
No, it's live up and running since December. So we actually started as an idea, as I mentioned, 15 months ago. And we started developing the technological backbone behind Nose probably like 12, 13 months ago. And our testnet has been live since December. And we're currently uploading the latest, let's say, testnet developed stage. That would be one of the final stages that we do. So we would be basically aiming at mid of May, something like that, mainnet with all the functionalities possible. So we are at the very final stage, finally, because it has been such a long development throughout the road. We actually started with 2 people with an idea. We are more than 23, 24 currently. Most of the people, of course, the IT developers that are developing everything as a backstone, as a technology. So it has been a long ride.
And could you go into detail about how the borrowing features work on Nolus and what are some of the benefits for the borrowers?
My pleasure to do
And
so.
also, if you can go into detail about what the Nolus DeFi lease is, and also how it solves the problem of over collateralization in DeFi.
Yeah, so the protocol itself it's entirely non-custodial solution. So you basically, as any user, as a borrower, as a lender, you can come with your non-custodial wallet and use the app. So the nose actually defines a money market between lenders who are trying and looking to earn yields on their deposited stable coins, and borrowers on the other side who are looking to amplify their holdings. So they have more assets, or they need more digital assets, they purchase more than their current equity. So borrowers are actually able to take the DeFi lease through that pool, taking stable coins from the lenders. So as a borrower, you are able to lock up a down payment, which could be in any currency, in fiat, in stable, in digital assets. You get up to 150% above what you provide as down payment as a loan in stables, and both of them purchase the desired digital asset. For example, you want to purchase Atom. You provide a down payment, you get 150% above that down payment, and now both of your down payment and the loan actually purchase your Atom position. And because they do that, it actually saves you and protects you from your margin call. So basically, the down payment and the loan now act as collateral. So you have 40% lower margin call risk compared to any other crypto lenders. So if you imagine it like that, actually crypto lenders currently they give you up to 50% and then they liquidate you after 35% drop of the price entirely. Now, Nose tries to solve exactly that because as a borrower, you get 3 times more exposure, first of all, which comes at 40% lower liquidation rate because we use the down payment together with the loan to purchase more of your position and use full of it as collateral. And the best part of it is that you actually own the asset and could use it in different yield optimization schemes while you're in the DeFi lease position. So you basically, as a borrower, you get your atoms. You can utilize those atoms, the full amount of it, together with the down payment and the loan, for example, to liquid stake it. And once you liquid stake it, your entire position, meaning the down payment and the loan, you use the rewards of the position. So you're basically creating something like self-repaying loans because Atom would be earning like liquid stake rewards of 20%, while you'll be repaying some interest of 10, 12, 13%. So use it during ownership lies within the user, and you use it during your DeFi lease position.
Sweet. So I was wondering, are there ways, like, can you give some examples of ways that, like, what kind of opportunities this opens up for users, as far as like putting down the deposit and the loan as collateral? Like, is it just yield opportunities? Like, what kind of things can you do with this?
So it's locked, both of them are locked into the smart contract. So they act as collateral, meaning that the nodes protocol need to whitelist different yield optimization schemes, yield protocols, for example, in order for the borrowers to use them. Such is liquid staked assets. So Stride Persistence with their liquid staked engines and their liquid staked assets, you would be able to, once you buy Atom, to use those in order to earn rewards. But this is only the beginning. The whole idea here is to actually integrate the nose protocol with many different opportunities to yield during your DeFi lease position, during your amplified position, and do it in a safest possible way. For example, once we start using IBC and interchain accounts in order to tap the liquidity of EVM chains, we would be using staking of Ethereum as well, meaning rewards from Ethereum. There are many other protocols within the Cosmos ecosystem and outside of it who are providing different yield optimization schemes or yield aggregations that we would be integrating into the DeFi lease. So while you're in a DeFi lease, you would be able to use those and do different, let's say, earn rewards in different ways. However, the collateral stays within that smart contract. It could be used in these different yield optimization schemes, but that's it. It still acts as collateral through your loan, so that lenders on the other side that provided your liquidity at the beginning, they are actually safe. They don't lose their money.
Awesome. So there's one other thing that I wanted to get into as well. Now that we're talking about this, so I wanted to understand how exactly does NOLAS address the issue when it pertains to the liquidations in DeFi. Given that liquidations are a major plague in DeFi, and from what I understand, Nolus offers a 40% lower liquidation rate compared to the market average. So if you can concisely explain how exactly Nolus reduces liquidation risks for its users, I'd love to know.
Okay, so the liquidation risk, first of all, is reduced in terms of when liquidation should happen. From the fact that we use both the down payment and the loan in order to purchase the asset, and the full asset now acts as collateral. Now, liquidations themselves, they don't happen on our own liquidity, meaning that we are not building a DEX liquidity. We are not going to have any DEXs underneath our protocol. We would be tapping the liquidity of different third-party DEXs. For example, the first DEX that we would be using is Osmosis at start, at Genesis, where, for example, if a person wants to swap assets, or when he wants to provide a down payment in one currency but purchase a DeFi lease in another currency, or when he wants to repay in any other currency, he would be able to do that. Under the code, we would be just swapping that asset through the liquidity pools of Osmosis. And Osmosis is only the first chosen DEX as a starting point. The idea here is to integrate really much more DEXs in the pathway. And for example, Crescent would be the second one that we have already agreed to integrate. There would be much more to come, including EVN DEXs, meaning liquidities outside of the Cosmos ecosystem, so that the engine beneath the Nose protocol is able to do liquidations as fast as possible when needed from different sources. And this is how we protect that liquidations happen on time, if that needs to happen, and they happen without lenders losing their money.
Awesome. So going back to Cosmos, so we know that Nolus is built on the Cosmos SDK Layer 1 network, which, as people understand, it's fast and expensive and also highly secure. Could you share more about how Nolus leverages the Cosmos network to deliver the unique features that you're describing and also the benefits?
Yes, of course. One of the greatest benefit of having your layer one is that you're not sharing your block space. This means fast transactions. Also, as you mentioned, they are inexpensive, so you're able to actually attract retail customers not only from Cosmos but actually cross-chain once you start using the technology beneath what Cosmos is. And the technology beneath, and currently what is the most important thing, is IBC and interchain accounts, because this allows you to do transaction from different blockchains at a speed of light without having too much cost to do it. So, for example, the end goal here is to have a user that's wants to take a loan from their MetaMask, and they just click 2 clicks on our Nose protocol on our web app, and they receive a loan immediately. But under the hood, you have from your MetaMask, you're sending some tokens, money, down payment, whatever, on a different blockchain, which is our built with Cosmos SDK, which returns you the asset that has been purchased to your MetaMask immediately. So at the end, you don't feel anything. You don't understand that you're switching networks. You're actually just doing a simple transaction very fastly. And this is one of the major advantages that we would be tapping from Osmosis. The other one from Osmosis, from the Cosmos SDK. The other one is that we really would be doing a lot of things with our layer one that wouldn't be possible if it wasn't on Cosmos. For example, we would be incentivizing lenders in different ways. We would be using NOS token as, let's say, primary usage and actual usage in our platform. For example, NOS would be used for gas. Also, NOS would be incentivizing borrowers for lower interest and lenders for higher interest. We would be using the NOS token as borrowers would be allowed to do not only 150%, but actually 400, 500, 600% above their down payment, or make a short position actually. So So basically, this allows us to scale very fastly. Cosmos SDK, it allows us to go cross-chain. It allows us to offer different products to different users. For example, retail users that just want to purchase crypto, and traders that want to trade 4, 5, 6, 7 times more than their equity, or do a short position.
So you said it's EVM compatible, right? So, like it taps into the liquidity on osmosis. Would it be possible, like in the future, to tap into liquidity on Uniswap or something, or is it only able to do like dexes that are on Cosmos native?
No, that's the idea of the IBC and interchain accounts, that you're actually able to tap the liquidity of different dexes on whatever network they are. So yes, that's the end goal. SushiSwap and everything that has a lot of liquidity will be able to use it to swap tokens and do the down payments and then do liquidations on that.
Awesome, thanks.
So I wanted to get into the other aspect with regarding the 150% that you guys were describing. So I understand that it's impressive how Nolus is offering financing up to 150%, as you said, on the initial investment. And from what I also understand from the research that I was doing, it reduces the level of collateralization by a factor of 3. If you can elaborate on how that works more into detail, I'd love to know that. And also, if you can discuss as far as like the team is concerned, like the research process and development process, and how that informs the company as far as how to add product throughout the roadmap, like things that things that you guys use in order to say like, hey, we need X, Y, and Z to add into the protocol.
Okay, so let's start with the 150%. So what we try to achieve here, maybe with an example, would be easiest to understand. So if you have 20,000 as a down payment, now this 20,000, it could be in any currency, meaning you can come with a down payment. You can first of all fiat up, ramp on some fiat, use it and convert it to stables, then use it, those 20,000 as down payment. You can have stables, 20,000. You can come with osmosis tokens worth 20,000. So all of those could be used as down payment. Because you provide 20,000 to the Nose protocol, it would be taking 30,000 in terms of loan, 150% above your down payment, as a loan in stables. Now you have 50,000. You want to purchase Atom. You want to purchase it at price of 10. So you're basically paying at 10, 5,000 atoms would be purchased for your position. So you're buying 5,000 atoms. Once you buy those 5,000 atoms, it's locked into your SLE smart contract and it's there to stay. It's yours. Now, once you come and repay the full 30,000 in stables, you would be able to unlock it, release it, and do whatever else you decide to do with it. Change it to another network, swap it to another token, whatever. Still everything within our protocol, within our web app. But during your stay, during your DeFi lease, you're coming and paying some, let's say 10, 12% interest rate per year. Because you are paying those 12%, you can actually make it a self-repaying loan by using those 5,000 atoms in order to liquid stake them immediately and earn 20% APY from the rewards of the atom, as an example. So in a way, you're creating self-repaying loan because you're paying more, less interest than what you're earning. And this is how the 150% is essential, because you are able to get more exposure to the asset without compromising your margin call risk, without having more risk in terms of being liquidated. Now, on the second things, I agree. The most essential part here for that position to happen is actually you are walking the price of the digital asset immediately at smart contract creation, and you would be able to use the upside appreciation if you decide to do so. So if the price appreciates twice from 10 to 20, you would be able to repay in full your 30,000 in stables and still all the upside of that appreciation from the 50,000 that you have invested or 5,000 tokens is yours to take. So the protocol doesn't take your profit, it's everything stays within you. And for future developments, there are many possibilities to do a lot of, let's say, yield optimization schemes, both in Cosmos and outside of Cosmos, including EVM chains. So the idea really after launch is to stress and try to do as much as possible integrations with DEXs and with yield optimizers that have sufficient liquidity, because liquidity is everything that we need. As long as it has liquidity, it could be used as swapping and then used to be liquidated if needed. So as long as this is true, we would be adding more and more to the protocol, subject to governance voting, of course.
Wow, this is some pretty big gigabrain stuff. Definitely not like other conventional DeFi protocols. But going to what I just said about them, usually with these more conventional DeFi protocols, they typically have high interest rates for borrowers, sometimes spiking to as high as 40%. And it's very interesting to see how Nolus has insanely low interest rates of about 10%. So how exactly does Nolus keep its interest rates low and fixed right from the onset of the smart contract?
Yeah, this is probably the other thing that we have changed a lot compared to other crypto lenders. Now, let me take a step back. If you're a lender, you provide stable coins into the pools. Once you provide stable coins into the pools, those stable coins would be used by the borrowers. Now, borrowers could receive an interest between, let's say, 10 and 18%, depending on how much liquidity currently there is into the pools. So the upper limit could not go up to 40, 50, 60, 70%. It's up to 18%. And the idea is that if there is a lot of liquidity in the pools currently, the protocol would be incentivizing to take more borrowing, more loans, so the interest would be at the lower end. And then vice versa. If there isn't sufficient liquidity, the interest rate would go up so that it decreases the desire to take new loans, but up to 15%, up to 18%, sorry. So the idea here is that we have tweaked a lot is that actually everything on the protocol would be on cash basis. So it means that we don't offer to lenders some imaginary promissory interest rate of 20, 30, 40%. We just say whatever the borrower repays in cash in interest, you would receive it immediately. And this solves one of the problems that we've seen with Terra, for example, because in that way, the solvency of the protocol would never be compromised. Because on cash basis, everything that the borrower repays in cash goes to the lender is as cash. And also, there would be capped liquidity, meaning lenders would be stopped after efficiency ratio is breached, meaning that new deposits wouldn't be allowed and lenders wouldn't be getting diluted. So we wouldn't allow lenders to be 20, 30, 40, 50 times more than borrowers. We would be stopping new deposits once this efficiency ratio is breached. And this means that the actual lenders that are there already in the pool, they would be receiving actual real interest rate from the borrowers, which would be probably 10, 12, 13% in stables, without talking about the incentivization, which is a separate pool with 12% of the total token supply that will be going extremely only to lenders in our native token as rewards. So basically, lenders provide stable coins. They are paid in on cash basis. They don't get diluted, and finally, they receive interest from our native NOS token. So probably first lenders in the first 2 years would be able to receive 30, 40, 50% APY.
Wow, that truly is something else. So if we can get into detail about the NLS token, would you be able to explain how the token is used within the Nullis ecosystem and how that benefits the actual token holders themselves?
The NOS is central because it's, first of all, it's a layer one, so gas is paid with NOS. Second of all, the NOS is used by different participants differently. For example, borrowers could stake the token and earn lower interest rate. Lenders would be able to stake it and earn higher interest rate. But also, we would be allowing, let's say, tiered staking, meaning that borrowers would be able to stake, and as long as they stake more and more and more tokens, they would be able to get different options within the protocol. For example, not taking 150% above the down payment, but 200. For example, getting a down payment that's more compared to other users on the protocol. And finally, the NOS token is essential because it allows users to transact with one another within this ecosystem. So the utility of the token is central towards everything you do within the platform.
Awesome. I see we're joined by Grickolt, but before we open it up to the audience, if you guys are new to our spaces, feel free to follow us here at Because Bitcoin. My name's Wabi. I host these spaces throughout the week featuring various founders from protocols, devs from protocols, from really every ecosystem. We've had people from Arbitrum, people building on the Cosmos Hub, people building
ETH mainnet,
on
all sorts. I was just naming other people we've hosted.
Oh, okay, yeah. My
No,
bad,
you're
man.
good, bro.
There's a bit of a sound delay on my end, but yeah, feel free to give us a follow. We'll be hosting a second space today with another Arbitrum protocol. Look forward to some things on optimism and layer zero. But either way, we have Grickolt. Grickolt, what's going on, bro?
What's
How you
up,
feeling?
Grickolt?
Hey, what's up, guys? Sorry I kind of came in late, just kind of scheduled it wrong on my end. But yeah, I mean, happy, love Arbitrum. We've been talking to Arbitrum, and yeah, just love to see the kind of ecosystem that's kind of bubbling. And I think from here on out, it's just up only.
I agree, man. So, so we're here with Nullis Protocol, and they offer, some DeFi services on the interchain, on Cosmos, and things like that. Great. If you have any questions, I know you come from like the more standard standard area of DeFi sectors. So if you want to ask any questions to Knowles, feel free to do so. Feel free to join the conversation. And I know you're also building a Sakuri, which deals with NFTs. So if you want to get into that and and inquire if there'll be some sort of NFT implementation to Knowles' borrowing system, if that's even possible, feel free to do so, brother.
Yeah, no, I'm appreciate the opening up. So yeah, in terms of like borrowing and lending, I think that's super interesting, and we have kind of explored that with our kind of protocol. Are you guys going to be just doing digital assets, or are you going to be doing like real world assets eventually as well?
Well, starting from digital assets, because this is where liquidity currently lies. And as long as liquidity starts building up for the other different real world digitalized assets, we would be able to tap that as well.
Okay, yeah, no, I totally understand the Oracle issue. So with in terms of kind of like growth markets, where do you kind of see the most growth, or is it just going to be like exotic DeFi products that you're going to be borrowing and lending against, or do you see yourself going into other markets like GameFi, or what's your kind of thoughts on that?
Well, definitely going as more towards retail customers, because the whole idea of our web app is to be really simple. Every single user to be able to use it very simply, no matter whether you're on Cosmos, whether you're on EVM chains, whether you're on Avalanche, it doesn't really matter. So you do 2 clicks in order to do anything on our web app. You can buy, sell, you can do the DeFi lease. In terms of offering, in terms of what assets, digital assets, the beginning would be about purchasing crypto, purchasing assets with higher exposure, lower risk. And then starting from there are many opportunities. First of all, we want to yield optimize on those assets, so you own the asset as a borrower and you earn rewards throughout it. For example, liquid staking, for example, different other yield optimization schemes, and then move towards different digital assets in terms of games, gamified, and stuff like that. But this is the long run, to be honest.
Yeah, no. I mean, in terms of long term, so I do understand you're going to go with LSD products as well, and all the other kind of like DeFi kind of stuff. What's your kind of, I'd say, roadmap in terms of like, I don't know if you guys are live or when you want to bring on certain projects. What does it look like from you guys?
Yeah, so we would be up and running somewhere in May as live product. Then starting from there, the first and foremost is that because we don't build liquidity for our transactions on our own protocol, so we would be using DEXs, other DEXs. So the first roadmap within 2023 is to actually integrate with as much as DEX is possible, so that we would be able to use that liquidity, including those that are EVM chains. And this is where probably the most important thing lies, is that we need to integrate into different blockchains and do our cross-chain transactions with IBC and interchain accounts, and probably with the help of different protocols out there, so that we actually tap the liquidity of different EVM, Avalanche chain, and not stay only on Cosmos. This is 2023 for sure. Then from there on, it's all about adding different yield optimizations throughout the way with different protocols that are offering, for example, liquid staked assets, for example, different assets that could be purchased, and so on and so forth.
And in terms of like partnerships, what kind of Web3 companies are you looking for?
Well, DEX is for sure, because we would be using a lot of them. We are also discussing with different different yield optimization options within the Cosmos ecosystem and outside of the Cosmos ecosystem. We would be doing ramp off and ramp on and ramp off. So we are looking for such partners as well. And in the short to medium term, I think those are the most stressed and important.
Cool. Yeah, I mean, those are the most questions I can think of my mind. Well, I'll be back to you, I guess.
Appreciate you, bro. Always love having you up here, and some pretty insightful questions, man. And I decided to bring up Sefi because he's an individual that's pretty well versed in the DeFi space, and especially in the Cosmos. So, Sefi, what's going on, bro? How are you feeling? How's everything?
Not too much. Just taking care of work stuff today a little bit. But have you guys covered yet where we are and kind of thinking about like Bitcoin price action for the next few months?
Perhaps on a different space, but I mean, I've been bullish for a couple of months now. So yeah, man, I quite frankly think that not necessarily like a bull market or anything, but we've definitely bottomed out.
Yeah, I'm kind of waiting for the leverage money to flow back into the alt space, but I wonder if maybe with so many different exchanges or whatever that got wrecked, maybe the amount of available leverage out there has been hampered to some extent. So I don't know if that may be why we're not seeing the usual sort of like post BTC altcoin pumps and whatnot that you normally see by now. So hard to know. It's hard to make of like what's going to happen with DeFi price action, but like BTC, I'm a little bit divided. On the one hand, it's like by fibs and whatnot, you might expect like 37K or something like that. But at this other hand, like by the end of the year, the U.S. at least will be in significant credit crisis more than likely, just between credit cards and just like interest rates being higher and loan resets and this, that, and the other thing. So I don't know that we're sort of out of the woods from a general like macro perspective. Odds are that we're probably not. I mean, like hopefully we get some nice cheap buys in there, but I don't know if we're going to see like really aggressive upward action. This sort of like Balaji thing with the $1 million Bitcoin bet or whatever, like is just absurd. Like, like just sounds like complete nonsense. There's no good way to like devalue the dollar sufficiently enough that would happen. And
It is
like
nonsense, but if that
most of
narrative
this,
can take us to like 48K, then it's a win.
exactly. If it's just a bunch of nonsense that they can push it, fine, whatever the fuck. Who cares?
Yeah,
I suppose. Like, there's always going to be
I think
some
it's
like,
tongue in cheek. Like,
yeah,
I
there's
think
always going to be
Vincent
some
believes in that
narrative, right?
himself.
Yeah,
That,
whether
that,
it's legit or not.
that brings
Yeah.
me to my next question. Does the Knowles team pay attention to sort of like if you want to put it bluntly, like macro events, the macroeconomic environment, in terms of like how you guys move as a protocol? Because I understand that there were some liquidity issues last year with some of these DeFi protocols. So I wanted to know, is Knowles going to be implementing some sort of like backstop as far as like over leveraging in the system and things like that?
Yeah. Okay. Let's take it from there. I love the discussion about BTC, and this is exactly why we built and tried to build a better lending solution, because you mentioned about Sefi, about the over collateralized problem, or maybe too much liquidity within the system when we don't see that much of it now. But the whole idea here is that with Novus, if you try to use it now, you don't need to time the market. You can buy BTC because you believe in the long run. So what you can do is actually take more exposure now rather than go to any centralized exchanges, and just have lower liquidation risk with it. So you would be probably get your first partial liquidation after you drop like 50% of the price from these levels. So you're getting better rates, and this gives you assurance that you would survive even if there is more downturn to the BTC, but you believe in the long run. And with a fixed, never changing interest rate, it actually helps you a lot to build your position, dollar cost average it without more risk. And this is where the problem lies within the previous bull market, that actually everyone got much more riskier than they should have been. And especially centralized, they did a lot. And this is how they failed, actually. With the Nose protocol would never do that because it's a fully non-custodial code. So it's basically just designed to give more leverage at better margin calls. Now, in terms of macro, it's
Can you provide a quick example? Like, so let's say we were to use your protocol today. What are we buying? What kind of leverage? What kind of liquidation levels?
very
Like,
short.
take Bitcoin for example. Right now, like how would that work on your protocol?
Yes, of course. So you can come with any down payment. Let's say that you have. I actually gave a little bit earlier the same example. Let me develop it a little bit for your question. So you have 20,000 in terms of down payment. It could be in stables. So you want to purchase BTC. The Nose protocol would give you another 150%. So you basically now have 30,000 as well in stables. So both your down payment and the 30,000 actually make up 50,000. You want to purchase BTC at current price, let's say it's 25,000, you purchase 2 BTCs. So at 2 BTCs, this is your position. This is what it's locked into your smart contract. Now your first partial liquidation, because both the down payment, your 20,000, and the 30,000 loan, or the 2 BTCs that has been purchased, actually now act as your collateral rather than only the down payment. That's with other crypto lenders. Like Aave, Compound, or Centralized, it doesn't matter. So your 2 BTCs actually cover your position, and your first partial liquidation would happen approximately like 40% drop of the price from now, and this would be a partial liquidation of approximately 20%. So if the price continues dropping from there on, another, let's say 5-7%, it would do another partial liquidation, and probably after 50 to 55% drop of the price, you get fully liquidated for your position and you lose your down payment. But still, you get three times more exposure, and you get much better liquidation rates with partial liquidations all over.
So you guys have, but your protocol is doing a pretty good job of balancing the funding rate and all. So to balance out the longs and the shorts.
So the idea here is that it's not like Aven Compound that you have one needs to provide BTC and another person takes that BTC as well. We do everything. The whole protocol works in stables. And this is what balances perfectly between lenders and borrowers, because lenders would be providing liquidity only in stables, while borrowers would be taking loans in stables, but purchasing whatever assets they desire. They can purchase BTC, Atom, whatever, Ethereum. They take loans in stables. They convert under the hood. It's converted on a DEX immediately to the other digital asset, Bitcoin, Ethereum,
Okay.
Atom, and then you need to return the stable. So you still own 30,000. So if the price appreciates, it's up to you to take. To the profit is for you. Let's say it like that.
And you have the ability to also cover your loan as well?
You have the ability to repay
like along the way.
if you want to
Mm-hmm.
at stables. Still, you own only stables. And if you do that, you can actually release the asset and do any other thing you want to do with it. Send it to another wallet, send it to another network, swap it still within our app, convert it to another asset, use it as down payment to another loan.
Guys, is it just me or did he cut off?
He just cut off there.
Yeah, I think he cut off.
Oh, sorry, guys.
But I think,
can you hear me now?
Yeah, I think I understand the system.
Yeah, so I don't know how much you heard. You obviously got caught up for a couple of seconds.
Most of it.
Yeah.
Most of it.
So yes, it's about you as a user to use you can repay it. Once you repay it, it's released to you, the asset, the 2 BTCs in the example. And now you can swap those 2 BTCs to Ethereum. You can use it as down payment to another loan. You can swap it. You can send it to another person. Whatever you want to withdraw it, you can withdraw it. Whatever, it's up to you as a user.
All right, we also brought up Soy, who's a part of the Neutron team building on Tendermint, and they're essentially building out the DeFi hub on Cosmos. So Soy, if you have any questions, feel free to do so. I know you cover more of the technical aspect side of things, so good to have you here, man. Hope you're feeling good. Hope you're having a beautiful Sunday, and thank you for coming up and, to talk some shop. So, yeah, brother.
Yeah, thanks for the intro, Wabi. Pleasure as always. Actually, hey, Nola's team, we know each other quite well.
Hey.
Nola's is actually, hey man, Nola's is actually using some of Neutron's code and contributing to our code base, so we're quite close with Nola's team. I actually had the pleasure of jumping on their early testnet the other day and playing around with it, and it's really cool. It's something very different for the leverage market, and I think people enjoy sort of playing around with it. So I was just wondering where you're up to with those guys, with the testnet now, guys. Is it going to be public soon?
Oh yes. By the way, this is what we hope to do this week from tomorrow. Hopefully by the end of this week we would be able to just send it to everyone that wants to test it, as you did last week. Minor things are left to be dealt with, but we want to really see it on a perfect working machine before we send it to anyone to see it. And hopefully we really are very excited about what we see, how it feels to us, and hopefully all others would think the same.
Good news. I enjoy playing around with it, and you just want to be able to tell people about it and show people the testnet, but obviously you have to keep it under wraps for now. So I think that'd be cool for people to play around with that next week then. But no, I just sort of came late to the space, Wabby, mate. So I just thought I'd pop up and say hello. But no real questions, to be honest.
Awesome, man. If anyone in the audience wants to come on up and ask any questions, give any statements to the NOLA's team, feel free to do so. And if you're new to the spaces and all that stuff and you're enjoying conversations like these, I'm going to say it once again. My name is Wabi. I host these spaces throughout the week with my boy, Feel Pain. We talk to founders. We talk to devs. We talk to VCs. We talk to individual traders, all that sort of stuff. And we'll be.
And if you have also, I'll just chime in. If you have anybody that you have in mind that you think would be a good guest, you can DM me or Wabi, and we can see what's up. If you listen to another space and you're like, "Oh, that guy's a really good speaker," this project's really cool, we're always open for recommendations.
Yeah, man. And gosh, man. Sorry about that, guys. It's pretty humid here in Miami. Miami has this weird stigma that it's like, it's always nice weather and all that stuff, but for the most part, it's actually like a steam room. But yeah, feel free to give us a follow, and also all the speakers up here. Seffi comes here quite often. Grick Holt comes to the show here and there, and Soy, as usual, always coming up and asking some pretty good questions, adding to the conversation. So, yeah, we'll leave it up here. If anyone wants to come on up, I know Valentin is one of our writers, and he's been putting in some work when it comes to displaying some pretty good DeFi data. So Valentin, if you want to come on up, feel free to do so. I also see my boy Tempest up here if you want to come up. And yeah, I see Bilyani up here. If you want to come up as well, feel free to do so. I sent you an invite to speak. But yeah, if you're enjoying these spaces, just want to let you know that we'll also be uploading this onto our YouTube channel under the Crypto World Radio playlist, and you can catch all of previous recordings and things like that. Like we hosted Soy and some of the other individuals from the Neutron team back in December. So been at this for a while, but Gert, I saw you had your hand up. What's going on, brother?
Yeah, I mean, I've just got one kind of question for the NOLA's team, and the question is essentially, if you could have like any sort of infrastructure or any sort of project in the space that would kind of help your project, what would that look like?
In terms of integration, you mean?
No, just in general, like what do you think the space is missing, and what do you want in the space from an infrastructure or a larger perspective?
Well, two things here. To my opinion, we are missing a lot the cross-chain activity, meaning that people from different, it's like a war between blockchains currently. Everyone thinks their blockchain that they're currently using is better than the other. And the whole idea of the crypto is not to divide, but to unite. So basically, this idea of actually making transaction through cross-chain is essential, and this is why we're trying so hard to achieve that. This is one, and the other thing that we're missing is UI, definitely, meaning user experience that's simple, that would attract new users, even with not about the lending and the borrowing so much, because even with Compound, Aave, centralized exchanges, you might have some good examples of good UI, but they're not the stigma, they are not the ultimate decision. It needs to be very simple solutions made for very different kind of people, so that more people could join the ecosystem. And this is what we try to achieve with the UI. Hopefully it would be so simple that even if you try to use it to purchase your first crypto, first of all you have a lending product that as a lease, because everyone has taken a lease in the real world. So taking a vehicle on lease, everyone knows how to do that. It's the same with the crypto. You want to purchase more, use it from the beginning, repay at some installments, and then you have it as ownership throughout the time. And yeah, I think those two are the two major stuff that we want to tackle, and we want to tackle it through the non-custodial protocol that we're building.
Cool. I guess I have one general question before we start wrapping up. So, what's the future roadmap for Nolus, and what are some of the developments that we can expect to see from you guys over the next months or even years? Like, what's sort of the end goal for Nolus?
Well, in the short run, it's all about, first of all, launching the network, because the mainnet is up and running, up and coming in May. The end goal, Nose wants to really change how inefficient lending is done by becoming a cross-chain leverage margin trading protocol, but with lower margin call risk, actual ownership of the asset, ability to create 1,000 of opportunities for many yield optimization schemes during your DeFi lease, and all of this wrapped up in a very easy, intuitive UI. So yeah, it's all about integration after launch, probably DEXs, a lot of yield optimizations, meaning yield integrating quit so that you use as a user during your DeFi lease. And yeah, this probably once we built it would be a year from now, I'm guessing.
Cool. So, if anyone on the panel has any, last statements or any questions for the people from Nolus, feel free to do so.
I just want to say, yeah, like I totally agree with your kind of sentiment regarding, interchain interoperability. I think that's super good. But yeah, I mean, look forward to the project and going from there.
All right, I think that about wraps it up here. We just closed in on the hour. So, with that being said, um, how can people get more involved with Nolus and help contribute to what you guys are doing? And that'll sort of be like my last question, really.
Oh yeah. First of all, thank you. Oh, it has been one of the greatest discussions that I have ever had on Novus. So it was a pleasure. And now Novus could be reached out through the channels, Twitter, Novus.io in terms of website, where you can see a lot of what we have been building, how we have been building technical documentation as well. But also you can expect next week to start preparing our lease drop campaign, which is like an uh, incentivized campaign where you can try and really feel the UI. Was something that I've mentioned a little bit earlier. So you can expect a Q3 campaign regarding that as well. And stay tuned in our Twitter account at Nose Protocol.
Awesome. I pinned you guys up on the nest. If you guys want to check out more of Nolus, I put something up on the nest. So feel free to check that out and give them a follow. It's pretty cool when you have a founder of a project speak so eloquently and fluidly, really, and can explain things on both a technical and non-technical level. So I want to thank you, sir. The pleasure and honor was all mine to have you up here and talk some shop with us here because Bitcoin. And I hope you had.
Thank you so much.
I hope you had a pleasant experience and all of those things. And hopefully it was worth your time. So yeah, for all the listeners here, feel free to give them a follow. Feel free to give us a follow. Hopefully we can have them up here again over the summertime or in the fall, and see what they're up to. This is a project that I'm personally very, very, very bullish on. And just to throw it out there, Ian Bellina and his team over at Token Metrics, they are one of Nolus's backers, and I trust Ian's word on whenever he puts his brand on something. He's backed teams like Matic from proof of concept, really. He also backed Helium and things like that way before the market even knew about them. So hopefully we can host them as well on a space. So yeah, congrats on that, guys, and congrats on your seed capital raise and all those things. I'll be following you guys more closely and things like that, and yeah, really excited for what you guys are going to bring out into the market, and we'll be uploading this space onto our YouTube channel under our live playlist on Crypto World Radio. And anyone can check out that replay, and your guys' links to your website and all that will be posted on there.
Thank you, guys. It was a real pleasure indeed.
No problem, man. No
It was
problem.
a pleasure having you up.
No problem, brother. It was a pretty fun discussion. So shout out to Grit Cult. Thank you, Payne, for joining me on these spaces as usual. Thank you, Soy. And thank you, Sefi, for coming up as well. And without further ado, just to conclude the space, me and Payne are gonna, actually, like all of us here, because Bitcoin, we're gonna have another crypto-specific space at 8:30 p.m. Eastern time. So in about 5.5 hours, we're going to be hosting Arc and Finance. Won't go too much into detail about them. I'll likely make a thread about them, and the Because Bitcoin account will likely retweet it and all that stuff, and drop a Spaces link. So if you wanna catch up with us more, covering more DeFi protocols, our next space is going to be in about 5.5 hours. And as for tomorrow, I think we're hosting another Arbitrum protocol, if I'm not mistaken. So a lot of Arbitrum stuff, basically. And yeah, I'm going to stop rambling now, man. I'm going to go eat some fajitas and a lemonade.
Ooh.
And all right, guys. Peace out.
Sounds
All right,
delicious.
see you guys tonight.
Delicious.
God bless you all. God bless you all.
Take care.